Hello guys, welcome back to the channel. Matt with Green Bar Trading here. I'm going to go over my trades on NVDA, which was a one and done, kind of scaled out along the way. Probably could have done a better job at holding a runner, but in this market, we've seen some pretty epic bounces. So once I got that move in my favor, I took all my profit off and then shut it down for $125. You do this consistently, right? You guys know I trade part-time. If you do that consistently, you make $100 a day. That's $25,000 a year. So, if you're looking for those huge days, try to be consistent and you'll notice your account just climbing nice and steady. Be nice and steady. So, before I get into the technicals on this and why I chose the options that I chose, please hit the thumbs up for the video. And if you are new, subscribe to the channel. You may be able to tell that I'm battling a little bit of a cold right now. So I'm going to try to get through this as fast as possible. All right, so NVIDIA was on my radar. Why was it on my radar? Because we were gapping up into resistance. You know from my videos previous, especially, with yesterday's video on Microsoft, I love when something is gapping up right into resistance and just play that fade. Now, in this case, it gapped up and then had a really nice quick move. So that was a great scalping opportunity. But like I said, could have held on for that next leg down, which we're seeing now. It's tough to tell when that's going to happen, obviously. But that could have been something I did. I still had 3 days left on the contract. So let's first go and look at this on the 4-hour chart, right? I'm going to make this a little bit bigger for you guys to really see why I was so short biased NVIDIA. Now, the market in general, I feel like it's overbought, especially the NASDAQ market. And we've seen every time, and this is the same on Microsoft, Apple, a lot of these big stocks that make up a big portion of the Qs, which is just the ETF for the NASDAQ market, the QQQ. We've seen price come up to this 280, 281, and then pull back pretty quickly, retrace. Comes back up to 280s, retraces. So when we were coming back into that same spot this morning, that's what I was looking for. I was looking to play this supply zone short. And that's what I did by trading options. So looking at this on what contracts I traded, what I like to do now at the time, NVIDIA is trading at 280, right? Remember, this was this morning this happened. So now we're currently trading at 275. So obviously the strike price would be different that I would choose if I was trading right now. But I'm trading the puts, which are on this side, right? I'm looking at my open interest. I'm seeing, where a lot of contracts are still open. You can see here on the call side, there's a lot more calls on NVIDIA than there are puts. So it's very heavily weighted on the long side, at least for this 3-day out expiration. Not that that really matters. NVIDIA obviously got a lot of calls because of the big move that it had. So that's totally normal. But when we were trading at 280, I chose the 277.50 contract. Why did I choose that one? I always like to choose the next one out of the money. That's what I like to target because I feel like I could stay in a trade longer because your premium will hold on better than taking something far out of the money. And then if the stock goes at just a little bit in the opposite direction, you end up having to take a loss instead of being able to stay in the trade long enough. Because if you're trading and we're currently at 280 and you're in the 277.50 options expiration strike price, that's the next option. All right. So you're not totally out of the ball game. You're keeping that that premium that you just paid for your contract, it's holding better than something far out of the money. So that's why I choose, when I'm trading, I'll usually take that next one out of the money. So right now we're currently at 274s. So I would look to take the 270, 250 short if I wanted to go short right now. So that's the way that I look at it. And the way that I did trade this today, looking at this, I bought at $3.35, 3 contracts. So again, only spending $1,000, very similar to yesterday. So you could do this with a small account and still make a nice return. So on that $1,000, I just got 12.5%. That's really good. $125 of profit. And my cash outlay was $1,000. So that's a good return right there on that really quick investment. And that's what I like to look at and what I like to do using a smaller amount of capital. If I wanted to do this with shares, like I showed you guys yesterday on Microsoft, that would be taking 100 shares at 280, right? So that's $28,000 if I wanted to take shares instead of taking options for only $1,000. So this is really good for, people out there with small accounts. Like I said, this would have worked with an account size of $1,000, and that's what we made. So keep all that in mind. I hope you enjoyed the video, and don't forget to hit that thumbs up for me. Take care, guys.